Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of NIO, ticker symbol NIO. And so I wanted to go over the chart today here on Sunday, November 2nd, because you guys voted on it. So thank you for participating in the poll. Already put out the AMC video, now doing NIO, and I'll likely go over rare earth tomorrow and possibly Snapchat as well, because I know I need to follow up on that since Halloween has passed. But in this video, I'm not only going to be going over the max pain data, also wanted to be going over this tweet over here, and actually a little chain, a thread from Cantonese Cat. I think that might offer some good insight into what NIO is going to be doing over the next couple months to year or so, and then also wanted to be going over some options data. But first, let's begin here with the chart. I did have it pulled up on the monthly, so why don't we start there, since Friday was October 31st when NIO closed at a price of $7.25. I think that's a pretty good close, but it could be kind of pivotal. And this is something that I've talked about in prior videos. I've actually gotten a little bit of hate, a little bit of frustration from people about this thesis that I have outlined here. But overall, I think it's a bullish trend longer term. But you might be able to see it here, that left shoulder here ahead and inverse right shoulder. That would be suggesting price could be coming down to around $5. I don't necessarily think it's going to come down to exactly $5, but I think it could be coming down, or at least pulling back a little bit, maybe to 6 or so. And the reason why I think that is the monthly candle here for October, it looks kind of like a hanging man. So we can actually, search that. So hanging man candlestick pattern. Let's just go down there. And, so this is from AI Overview. But let's see if we can scroll down here to get to Investopedia. I think that they tend to have, a little bit better of a, more well-rounded resource than something, it doesn't look like, I think it's like saying from, I believe the All In podcast was, where do you bury, a body on the second page of Google. So, I'm not going to do that. I'm not going to go into a can of worms. Actually, this video is maybe a little chaotic because, I got to be doing some work outside with the daylight savings. I just kind of realized that I'm a little bit behind schedule. But yeah, this is a hanging man pattern. I'll try to put this link to this page in the description of the video so you guys can learn more about it, read more about it if you like. It's possible it's not a credible source, as far as the writing goes, but as far as the image goes, you have an uptrend, a hammer candle, or in this case, a hanging man candle. It suggests a reversal, and then you start to go into a downtrend. And so looking at the chart on the monthly, we have this uptrend here. It looks like a hanging man. Maybe it's not as, bad as it is over here because it's not a gap up like it was here, then pull back and then close lower. That does not look so good over there. Over here, we didn't gap up. Actually, we did gap up and then we pulled back, closed lower. So yeah, this, in my view, is a hanging man candle on the monthly. So it does make me think that we could be seeing a pullback. And let's see. I could do a Fibonacci retracement here on the monthly. And that would be suggesting, and this is approximate, I'm not doing it fine point to the levels exactly, but like 550 is going to be the 50% retracement there. So, I think that is a level to consider, that price could be coming down there. It's not necessarily going to, but it's just good to have a plan for if in case it does. So did just want to put that out there. I do have the level here at 518. I'm not sure exactly what that corresponds to looking at the monthly here. But yeah, generally, I think that looks a little bit bearish at this point. And I kind of talked about that before and got some hate for it. That was inspired by some contracts, which I'll go over some of the data that signal that there, but not the exact contract itself. But one thing I've also talked about is when switching this over to the logarithmic y-axis, Even on the monthly, we've got this nice, beautiful downtrending parallel channel that we've been in, or we entered, at the end of 2021. And then we've traded down in that channel for 4 years. Is that right? 2, 3, 4, 5, 4 years in this channel. Actually, less than that, because we have broken out with that inverse head and shoulders pattern. And so pulling back to around 5 to retest the approximate level there, 50% retracement. Like I said, I don't think that'd be really that bad. But at the same time, what does the data suggest on the daily time scale? What does the options data suggest? And what does Cantonese Cat have to say about NIO? So let's think about that. Switching over to the linear scale on the y-axis, going to switch over to the 4-hour, I meant daily. And then let's just bring that forward. And so we can see, I'm not exactly sure when I put out the last couple NIO videos, but it was around here. And I have to say, I do hold one call. I'll go over that contract in a little bit. But I had some shares. I had a number of these calls, same contract, but a number of them. And I sold all of them, all of the shares, all of the contracts except for one. And the reason why I held it is because maybe I'm wrong and it's not going to consolidate before either continuing up or breaking down. Or maybe I'm right and it's going to consolidate, bleed out the premium on those contracts. That is going to be a theta decay. I believe time with price staying kind of flat here, that contract's going to decrease in value. It has. And then if it goes up, great, I'm long with that one contract. If it pulls back, then maybe I can add more. And it's a longer dated contract, so I think that I am looking pretty good with that. But anyways, there's a lot of rambling here. And what you can see is, a higher high here corresponding with a lower high in the RSI. So that's going to be bearish divergence. Following that, we did see a pullback. We did see a lower low, also corresponding with a lower low here. So there's no bullish divergence there. Bullish is going to be based on the bottoms. Bearish is going to be based on the tops. And what we can see over here is then, a lower high, also a lower high. So no bearish divergence right now. So I think that is good. But yeah, we had this like kind of stair step up pattern. Maybe we see a pullback, and we did kind of have that over here. I actually remember this. I thought it was going to be going up to 8. We hit a high of 771. 8's a very important level. Got rejected from it here after forming this bull flag, broke higher, but then came back down. And so I think that we could be in that kind of phase with this. We've had multiple bull flags on the way up, but then we kind of lost some steam. Volume, though, has also decreased as we have been consolidating in the $8 to $7 range, but we did actually hit a low on October 16th, which was 628, so getting kind of low there. And with that being said, with it consolidating in this range, volume's pulled back some. Actually, volume was elevated on that on the 16th when it did come down, so maybe that's a good sign. But as price has gone up, volume hasn't really been pushing it up, so that actually does make me think that while generally still looking at the daily, but just generally looking over here, it's consolidation and volumes decreased. So I think that's good. That suggests it could be a bull flag. However, if we look at the more micro price action, like I'm saying, price comes down, volume goes up. So that's good. Buyers are stepping in, pushing that price action up. Got absorbed down here, I believe would be the term. Pushed that up, got rejected from breaking below this level, or bounced from this level around 650. But then as price starts to go up, as price goes up, you want to see volume backing up those moves. And volume's really just been kind of flat. And so I think that this could be going lower. So do be cautious of that. Do be prepared for that. $5 about, sub 6 at least. I think that's on the table. So good to keep that in mind. But with our close at 725, that actually doesn't look too bad relative to the max pains. So over here, max pain for Halloween, which is October 31st, if you're not familiar, Max pain was $7, so closing at $7.25. That's good. We closed in the money. We closed on the bullish side of the long contracts, so that's good. But we didn't close multiple strikes above max pain. And with current price at $7.25, again above max pain, and max pain's being $7 for this coming week, the 7th, $7 for the 14th, and then $6 for the monthlies for the November 21st expiration. That could be, kind of suggesting that price could be fading. We are seeing that in the chart. This could actually be playing out. This could actually be a really good call of mine. It just takes time to play out. I don't always have good calls. I think I'm always wrong one way or the other, whether it's time or whether it's price, the level, or direction even. But looking at this, looking at the max pains, I do think that it could be a time to be prepared for the possibility of it coming down. Like I said, maybe not 5, maybe 6, but then if we look at December 12th, max pain is $5. So maybe that's something, to be prepared for, that possibility. And so I was going to go over to the Cantonese Cats tweet, but I think I am going to just go over the options data here. Just going to zoom out so we can see, stuff on both sides there. And so this is the one call that I hold. It's the $10 strike call that expires in June on the 18th, so 228 days from now. And I forgot to do this before starting to record, so I am just going to check what my average is. I believe I thought it was 37 cents, 32 cents. And this is currently at, a low on Friday, October 31st. The low for this contract was 90 cents. So I'm still green, I'm still good, and I had actually considered selling it, just managing risk spread too thin in my portfolio. I just thought this could be one that, hey, maybe I want to ignore it. Maybe I don't want to think about it or worry about it. I decided to hold it because, I'm green in my position. I do think that NIO could be getting to 10 between now and June. I think that's feasible. And, it's no sweat. I'm risking like $32 of my own money, although I could be selling, getting 90 back. I'm not worried about it, and so I think that this is a compelling contract, but I think it might be a little pricey now. And a couple of the reasons why I think that: this is the data going back 30 days, and we can see the premium for this contract in yellow going up to as high as $1.40, so about 50 cents higher than the low on Friday. And then premiums come down a lot to around the $1 price range. And with that, we haven't seen a lot of, volume picking up, orders picking up on this contract with it being so low here. So that makes me think it could be continuing down to the next level, just like we saw, kind of these bull flags on the way up, stair steps up. We could be taking the elevator down. I don't think that's what's going to happen. I think that we might be taking the stairs down, like I said, to around $5. And so I think this could be an appealing contract to buy. Maybe if it comes back to my average around 32, that's why I still hold it. But if it doesn't come down to 32, that's also why I still hold it, because I want to make some money on it. So yeah, I think that that's interesting, something to consider. Options are very risky, though. They do expire. They oftentimes go to zero. This one might be. Maybe it closes at $9.99 on June 18th. That's still very bullish from current price at $7.25 for the share price. But that, would be, closing out of the money here. And then so another reason why I'm not necessarily super bullish on this right now is if we look at the net call and put premium over here, and I'm actually just going to expand that to the bigger window so we can consider that over here. And let's see, this is just 1 day, so let's expand that to the past 30 days. So this is the exact same data that we're looking over here, just a little bit bigger. And so the thing that stands out to me about this, or actually that doesn't stand out to me about it, is net call and put premium hugging that zero line. There's very little, spikes or wiggles around it. It's kind of flat. Whereas you had some spikes in net call premium over here, some dips in net call premium over here. But generally, it's been kind of flat. And actually, if we do look at it over here, you see the $1 million line right about where the cursor is. We haven't even been going up to $1 million in premium. Actually, maybe we have a little bit to the downside, so maybe I should look at that a little more critically. Yeah, so on October 27th, net call premium came down by 1.26 million, so that's potentially bearish. Over here, we saw net call premium go up by 2.69 million. I believe I've talked about that before. Maybe that was just during a stream. Over here on, let's see, October 13th, 7.9 million net call premium increase. So that's good. On that same day, though, we had a net put premium increase of 1.71 million. But what happened with the stock price following that? I mean, it kind of like went sideways and, it's gone up a little bit. So the stock price is in yellow there, but it hasn't really been too impressive. And so this just kind of makes me think that it's, theta decay. We're just sticking in this range and, it's just basically going to bleed those contracts out and there's no volatility in the stock anymore. And so it's just going to fade lower. And also, this is something I've talked about a couple videos ago that really pissed some people off. If I go back, let's see, I think just a couple days. Let's actually just, what is the decrease? Yeah, okay. So, this is the 31st here. So that's this day right here. And we see this drop in net call premium. Yeah, actually, I didn't even need to go back in time. It's fine as it is right there. But what we can see, the reason why this net call and put premium seems so flat is because we had these massive sell-offs in calls. This was, one of them was on September 22nd, and it was like in the last 15 minutes of the trading for the day. It might have been the last 30 minutes, but like the very end of the day, a decrease, a drop in net call premium of $13.13 million. That makes me think it's kind of bearish. And then over here, the day after, again, like the last 15 minutes of trading, a drop in net call premium of $9.06 million. So that signaled to me that, maybe it's not necessarily bearish, but maybe it's just those who are long taking profits. And so that kind of spooked me, whether it's that I thought the top was in or I just thought that it was going to be consolidating. Like I didn't necessarily think it was going to be pulling back right away because the market has a way of, getting people to hold for too long, theta decay, and or to rug people when it's, at or around 8. And so the stock price did go up to around $8. We could actually look at that over here. The high on October 2nd was $8.02, but that's been a very significant level in my memory. My recollection is that $8, super important level. Everybody's thinking about it. So we got up there, but we kind of got rejected. And as we got to those new highs, as far as this trend goes, volume wasn't really backing that up. So that makes me a little bit, concerned that that could be the top. Now we're putting in a lower high. But, coming back over here, I wanted to talk about September 22nd and September 23rd when we had those $13 and $9 million drops in net call premium at the end of the day. So the 23rd and the 22nd. Oops, I want to go over to the chart here. And so let's see, the 22nd right here, red candle day, and then the 23rd. And so those spooked me. That's around the time that I closed a lot of my positions. Still holding the one call contract though, still long. I'm not shorting NIO, but I'm managing my risk. It went up a little bit higher. I could have made a little bit more money, but it's no big deal. We never time or pinpoint the exact top or the exact bottom. That's why like every single trade, every single bit of analysis is going to be like 90% of the time plus more than 90% of the time is going to be wrong because we never get the exact top or the exact bottom. And so I saw signs to me that made me think that this is going to be topping. It also matched my analysis over here. And so with that being said, I missed out on some gains, but really I've saved myself some time because we're still trading around $7. So no big deal there. But yeah, I mean, this just makes me think that we're going to be coming down to, I don't know that we're going to come down to $5. I don't know that we're going to come down to $5.18. Maybe we don't even break $5.50. But if it's at 725 now, I think that there are going to be better opportunities to go long, whether that means buy shares or buy calls or sell puts, which is bullish. I think that there's going to be more better opportunities to do that in the coming months. Also, I guess I should note that the approximate earnings date is going to be Wednesday, November 19th, but maybe that's not true because it does say that it's approximate. But yeah, with all that being said about the chart here in my analysis, let's look over at what the Cantonese cat has to say. You guys can follow them on X. I just recently started following them and I really like their analysis. So I wanted to share some of that with you guys because some of what they wrote really, kind of resonated with me and I think probably resonates with you guys in your experience as well. And that's actually, not from the tweet up here, but actually the follow on down here, the thread where Cantonese cat just says, to those who were bullish too early, it happens. Unlike other accounts, I was saying for about a whole year that NIO is not ready, but I think your time will come soon. That resonates with me. I mean, I was definitely talking about NIO too early. I'm glad I was able to make some money with it, but it's like now it's finally breaking out. But then there's more money to be made on those who are long, so it's going to come down more before it actually breaks out. The markets. Doesn't matter. They're all manipulated to extract the most liquidity from those without conviction, without discipline to do the research, to understand what's going on. They sell at the bottom and then they FOMO in at the top. And so right now, I don't necessarily think this is a FOMOing in at the top, but I think that this is, we need a little bit more discipline before it does start to go higher. So let's just read about and go over the screenshots that Cantonese cat has of their charts. So number one, the weekly, it shows a higher high, which is a sign of a bullish trend change. And so this is on the weekly, and this goes back to, it looks like September of 2024, higher high over here. So if we look at that on my chart, that's, basically the armpits. That's exactly the armpits. This was September 30th when we hit a high of 771, and then we did put in a higher high. So yeah, I think that that is good. Although, yep, and we do have, not lining up exactly, but we do have a higher high in the RSI, although it did go lower over here. So on the shorter time frame, that would then be bearish divergence, lower highs in the RSI while we had higher highs up here. So it's just, it's losing its relative strength. It's becoming weaker. So I think that's something to consider. But yeah, I mean, higher high macro, this is, going back more than a year. We put in a higher high. So that's good. That's good. And then let's just take a step back to read about number two, is that we broke through the weekly Ichimoku cloud. I'm not sure what that is, I'm sorry, but could backtest in the fives. So not necessarily coming to 5, but backtest to the 5s. But so let's think about this. The Ichimoku cloud. That is going to be this cloud, I believe. It says Ichimoku up there, which I don't know if you can read it, but that's what it says. And that would be coming down to, it looks like I can see on the y-axis here around $5.20, a little bit higher than that, maybe $5.25, but that does seem to match pretty nicely with the 518 level that I have here, which was actually the close from December 9th of 2024, closing at 518. So that's why I have that on there. I think it's good to have, confluence of whether it's levels or analysts talking about similar levels. So talking about this coming back into the 5s, nobody wants to hear it. We want to hear up only. But I think that there's some confluence between Cantonese cat's analysis and my analysis here around 520. So I think that's something good for us to be prepared for. If we continue on to number 3, weekly chart shows buy order block in the 5s, showing confluence there. I was just talking about confluence, and to be honest, I hadn't reviewed this tweet before making this video. So there's that word again, confluence, and that's the weekly chart. I don't know where he's getting the data here for the buy orders, but kind of the way that we can, oh yeah, so that would just be, you look at the exchange and you see where does everybody have their orders placed, where do they have their sell orders placed. And it looks like, I imagine the orange up here, or the red, that would be sell orders centered around $10. That makes a lot of sense. That's the strike for my call. It's also a whole round double digit number, tens going from the ones place to the tens place. So that kind of makes sense. But then we see all these buy orders. So if there's, momentum with this going up, but then it kind of loses that steam because people are saying $7, I could buy it at $7, sure, but I'd rather buy it at $5. So I'm just going to wait. And so it looks like this midpoint for the buy orders is around 520. And so, I mean, if you think about this in like a maximum pain sort of way, like what is going to, drive people the most crazy? If it needs to pull back so we get more buyers on board, I'd say come into around the midpoint, around 520 makes most sense because you're going to get the fuel needed to send this higher by picking up half of those buyers, getting them on board. But then you're going to be leaving about half of those orders behind. And then when this breaks out above 8, then, it's like, oh, now we're definitely putting in a higher high. This is going to 10. Those who did not get those orders filled, they would then FOMO in, and then that's further rocket propellant to get this going higher. So I mean, looking at this, I like the thesis of this pulling back to the fives. May not get to 5.00, may not get to 518 or 520, 525, maybe somewhere around there. Price could be coming down that way. And then so going over his fourth point here, the monthly chart shows 20-month simple moving average, which is the orange line. So let's think about that in a second, is now no longer resistance, but is support. We flip resistance into support. So that is good. That is what we want to see. But could get back tested in the 5. So again, that number is haunting us, $5 bill. And so looking over here, he's talking about the orange line here, and that is the 20, what did he say? He said the 20 months. So that's a big time frame. Simple moving average. We broke above it here and the price went really high. But if you extend that back in time, you can imagine that, the first time that it got above it, probably over here, price came down, broke below, fake people out before attempting to get above, pulling back, and then breaking above and launching. And so we're kind of doing that again. We've broken above. Now, if we back test it, that's going to look really good. That actually could be coming down to sub $5. It looks like where it's at here, that's around 480. Back test that, and then we launch. And that would suggest, this is on the monthly time frame, but that could be suggesting the cursor here is around 5150 or 64 right here. And that, I would have to say, if I do switch this over to the monthly, switch this back over to the log scale, and then just drag this, oops, I switched the volume to the log scale. I wanted the chart on the log scale. That, really matches with the analysis over here of this parallel channel. And if we could get back to I have the base of it here around 33, but getting up to the top, that could be 65. And maybe, this gets to blue sky territory. Again, though, this is on the monthly time frame. So going back to these highs, that's February of 2021. And so, December of 2021. Yeah, it was the end of 2021 when we entered it. Yeah, so that's 4 years in the past, 4 or 5 years in the past. So, it could, maybe we took the stairs down and then this, take the elevator up, stairs down. I think this is kind of like Max Payne because people are more inclined to be bullish to go long than to short, I think, the average retailer. And so with this, stair step down, maybe we start to see an elevator up, which could be in 2026. And so, I think that this could be going to the levels I have here, whether that's, $10 that I've talked about, or, 13, 22, 20, 30, maybe higher, maybe 60, stuff like that. So good to keep that in mind. But then coming back to this tweet, let's just finish this off in case you didn't read it, which of course we did, or in case you weren't listening to me, hopefully you were. The TLDR is the trend has finally flipped from bearish to bullish, and it would be healthy for it to form a higher low. And so the lesson is, the trend is your friend. And NIO could be your friend in 2026. So maybe not the end of 2025, but maybe throughout all of 2026. I was early in getting bullish, and, we might just have a couple more months of a little bit of a pullback before we see maybe a full year of this just going to the upside. So I feel really good about this. But as far as like shares or calls go, I'm in a chill. I have an alert at $6. And if that goes off, I'll look at the chart more critically. But if it doesn't go off, then I'll be cheering for NIO going higher. I suspect it will be going off, and then I'll probably be looking to start building up a share position maybe, or maybe getting some more of those $10 strike calls that expire in June of 2026, or maybe a further out expiration date. I don't know. But, I'm just going to be kind of chilling, waiting to see this pullback. But yeah, on the monthly, it looks like it's topping. And if we are to be putting in a higher low, we'd be doing that right around $5 for sure. Because, the lows over here, ones that we need to be sticking above. But yeah, the lows, I guess I should say for August, the low is 437. So let's stay above 437. The low for September was 560. We might have to take out that low, but I think that would be discount dip buying opportunity. We're just not there yet. It's getting a little bit exhausted, which, not only do we see that in the monthly time frame, I keep making volume linear or non-linear. But yeah, looking at this on the daily, what did I want to show here? Just that the volume, it's not supporting the uptrend. Volume's decreasing. So I do think, unfortunately, we need to be bracing for the $6 down to $5, maybe a little bit lower range, but maybe not even getting to $5.00. So do keep that in mind. But as always, thank you so much for watching. And as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more NIO coverage. And I will be doing ticker requests live tonight, so make sure you tune into that. I will be talking about recognizing euphoria and also some sacrificial lambs, just kind of some ideas that I had before taking requests. Make sure you tune in. I'll see you then. See you later, guys. Enjoy the rest of your Sunday. Bye.